CNBC-TV18, embarking on a quarter century of excellence.
Welcome back. You're watching Big Deal and we are discussing the equity market deals in the year 2023 and the way forward. Remember that huge amount of money has been taken as exits and returns by the investors in IPO as well as block deals in 2023. Now, we are discussing this, Pranav, very quickly. How is the pipeline looking? Because you are into looking at growth stage and late growth stage investments. And those are the ones which get ready for the future IPOs. How's the pipeline looking? And also, how are the valuations stacking up from the new age companies?
Yeah, I think the pipeline is actually building quite well. At least for the last few months, we've seen a fair bit of pipeline. In fact, I tell our investors we are one of the best pipelines that we've seen in a long time. It's a culmination of two things, right? And we cater to liquidity requirements for people who want to kind of exit right before the IPO. And we also cater to the growth requirements of the companies who want to take some growth capital right before the IPO, 2 to 3 years to IPO. So I think because we straddle both and we can understand the we have a great relationship with private equity firms, and then we really understand the public markets really well. We straddle this pretty well. I think it's a great time to be in this space. The growth requirements for for the companies, given the growth of our economy, is massive.
Yes.
So you're seeing
right.
that, and then you're seeing a lot of equity firms wanting to sell. So it's a great time for us to be here.
So Gesu, in terms of the new age companies' valuations, what do you have to say? Are they understanding now?
So, I just say that this, Nisha, that look, the new age companies some of them have been listed for almost 2 years now. I think there has been a good understanding of the companies that are, planning to go public, of how the public markets behave. There's also learning and understanding at the end of the investors who are now expecting profitable growth companies that have, solid fundamentals, who probably not just showing path to profitability, but actually showing signs of becoming profitable. So I think both ends have kind of learned over the last 2 years, and we do expect that there's going to be a very good year next year, actually, for a lot of new age companies. And
all right. So the biggest catalyst, I would say, is the equity markets showing rich valuations, and the run-up in the equity markets that we have seen recently also, and many windows have been provided in this year. Atul, final word on the key themes that you are seeing, and given a mix of many interesting factors like the political risk, geopolitical risk, and the inflation as well as interest rate lag effect showing up next year, all put together, how do you see market and market supporting your business and the key trends?
So very bullish on the next year, which is calendar year 24. We see it to be a great year. Pipeline is building up fantastically. High quality companies, great management. Though there is a high concentration of financial services, consumer business, leisure, travel, and I would say the consumer tech digital business that you referred to. On a whole, I see it's a very, very balanced market. What is interesting, what is really, really appreciative and is going a long way is that investors are coming in a very big way into the market. Look at any IPO, 60 to 65% of the demand is domestic, 35% is foreign institutional demand. What is more interesting is the retail participation, both at the retail level and what we call in JM as the upper retail, which is the old definition of HNI. I think we are seeing tremendous demand in that sector. And that's essentially because, and solely thanks to SEBI, because the timeline has been curtailed from good old 45 days to now a week from the time you make an application to the listing. So the velocity of the money that can move in the market is very high, and that is adding fuel to the fire. So,
okay,
so there is
so a trick
demand.
Question finally. I have only 2 seconds. A trick question, hand on heart. Are the valuations stretched, especially in the IPO market? even though there is
Hand on,
frenzy.
hand on heart answer, the valuation at first look seems to be marginally stretched, but then when you analyze it, this is a once in a lifetime opportunity where India is really shining, and great companies within India with great management will not come cheap. So you have to
All
take a
right,
3 to
all
4
right.
years view and buy great
Yes.
management.
All right. So given the bullish outlook on India, the Indian companies will not come cheap. Thank you so much, Gesu, Pranav, as well as Atul, for giving very interesting thoughts and the way ahead for equity market deals in the next year, 2024. So that's the roundup. Very bullish trends, and equity markets are expected to show a lot of traction and action in the next year as well. With that, thank you so much for joining us on Big Deal, and keep it with CNBC TV18.
CNBC TV18, embarking on a quarter century of excellence.